This is episode 97. And today we're talking about how to pay yourself if you own a business. Oftentimes this is the century of entrepreneurs, and when individuals start a business, they often wonder, how do I go about paying myself and still being compliant legally and through business-wise? Oftentimes you hear about a LLC being a disregarded entity for a single-member LLC, or if it's a multi-member LLC, it's considered like a partnership for tax purposes. And so how does that go about? How can we go about paying each other and paying ourselves? We're going to talk about that in this video today. So stay tuned. What's up, guys? Thank you for tuning in. Today we're talking about how to pay yourself properly and following the laws when you have a business. One of the most popular legal entities in America is the LLC, the Limited Liability Company. It limits your liability, the Limited Liability Company. But it's not the only legal entity in America. We have the S Corp. That's a pretty important entity to talk about. Most individuals don't talk about it, but it's very similar to the LLC. But it has its advantages. You can't really have any foreign owners owning the S Corp. But the benefit is that you don't have to pay self-employment taxes. So, think about starting a business. Oftentimes, individuals will say the LLC is the default. That's not necessarily the case. Everything is fact specific. What's particular to you? The C corporation, they have that. I often talk about that. You're going to be in a stock market, or if you're trying to raise money for venture capital, C corporation. Real estate investment trust, REIT. That's dealing with like big portfolios of land and real estate. But today we're going to talk about the LLC, because that's often the most popular legal entity in the U.S. So how do you go about paying yourself with that? It's very important to understand. Can I just write a check to myself, or do I have to go about some other ways to do that? We're going to talk about it in this video. Let's talk about, really quickly, just the legal formalities of creating an LLC in America. Generally speaking, it's your Secretary of State's office. You go there, create an LLC. Then after that, you'll get your EIN number, which is your tax ID number. And then after that, you can create your operating agreement, and you can be able to get your business bank account and things such as that. So those are some of the most important things to consider when you're starting a business. But once you have a business and you have money coming in, you've done some business development activities, you know about marketing, you got some clients coming in, and you're making money, how do I go about getting that money out? Well, the best practices are, you want to have 3 bank accounts. That's what the best practices are. And it's important to understand the best practices, because this is typically the best way of going about practicing what you're doing. So, with that said, the first bank account you will have is your bank account for your expenses. If you have any employees, if you're paying any utilities, if you are, whatever your expenses may be, your insurance, all of that will get paid out through that account. So when you bring money in, from the money you're having coming in, some of that money has to go to paying your expenses. So you have an expense account. Second account is you have your bank account for your taxes. You want to set aside money for your taxes, because you're making a significant amount of money. You have to pay taxes, business taxes, once every 3 months to the IRS. This is in America. You have to pay taxes to the IRS, Internal Revenue Service, and they are serious about that. So instead of having to figure out how you're going to find this money to do that, whenever you have money coming in, you have a certain amount of percentage going towards your taxes. And then the rest of the money can go towards your traditional business bank account. For your money, for your profit, the profit can go towards that. And from there, you can write checks to the owners. Write a check to yourself from that business bank account. And you can use that for however you want to use it. You can keep that money in to the business from that business bank account. And then you're following the best practices. Now oftentimes that means you may have to, if you can't find a bank that give you free checking, that means you may have to pay for monthly expenses for all of those bank accounts. In the beginning, that may be difficult, so you may have to be able to manage your money best with one bank account. But the best practice is 3, and hopefully with enough growth and with enough persistence and determination and hard work, you'll grow into something where you can easily afford these bank accounts. You'll easily be able to afford the salaries of an attorney, such as myself. Attorney salaries are tax deductible, FYI. So, but those are the best practices, and it's very important to understand that, because that business bank account is often overlooked. When people definitely typically don't have a bank account for their taxes and for their expenses. But that way, everything is separate. You're not really commingling things. You're not really you're being compliant with your landlord, with the bills you have, as well as you're being compliant with the IRS. It's very important. But it's important to know that that tax account is very important, because for LLC, it's an interesting legal entity. Because if you're a single member LLC, if it's just you that owns the LLC, considered a disregarded entity for tax purposes, you'll get the limited liability protection from a legal perspective, but from a tax perspective, you have to understand those are different. It's called a disregarded entity. So all the money flows down to you. That's why I talk about when you have a single member LLC, you'll file your Schedule C every single year. So you have to pay income taxes on all the money, on all the profit, on all the money, whether you take the money out or you don't take the money out. You still have to pay your taxes on that money. That's important to understand. The same thing if you are a multi-member LLC. Whether you write a check to the partners and the members of that multi-member LLC, you still have to file those taxes and pay taxes on any potential profit from that business. So from an LLC, single member LLC, it's just you. From a single member LLC, you file the Schedule C. If it's more than one person, more than one member, more than one owner of the LLC, you fill out the Schedule K1 and the tax form 1065. So those are some of the things that's very important to understand. These are some of the best practices you want to go about. I highly recommend talking to an attorney, talking to a tax attorney, or talking to an accountant. They'll be able to help you, give you more insight onto this, but these are the best practices when it goes towards starting a business and running a business and operating a business. That's very important, and hope you all have enjoyed this video. But to recap, we talked about starting a business. We talked about some of the tax laws. All income derived from any source is generally deemed taxable. Don't let anyone ever tell you that you don't have to pay taxes. That's absolutely incorrect. There are multiple laws that are talking about how you have to pay taxes. I've debunked that throughout these 90 plus videos. And we also talked about different bank accounts that you're supposed to have, the tax forms you're supposed to have. If you're an LLC, single member LLC, the Schedule C. If you're multi-member LLC, the Schedule K1, tax form 1065, and you pay based on the percentage of the LLC that you own. That's very important to understand. But hope you all have enjoyed this video. This has been episode 97. One step closer to 1,000 episodes. Thanks.
I